I had forecasted gold prices would bottom out at $18.50 an ounce. They're down to $18.22. I didn't think they would go this low. Did not think it was going to happen. But here's what's going to happen. When they lower interest rates, the dollar is going to go down. When the dollar goes down, it's going to be the beginning of the death of the dollar. And when the dollar goes down, gold prices are going to spike.
On Tuesday, gold prices remained near a 7-month low, primarily influenced by a robust dollar and elevated bond yields. This downward trend in gold was driven by the prevailing sentiment that U.S. interest rates would likely stay higher for an extended period. Bob Haberkorn, the senior market strategist at RJO Futures, states, "If the Fed continues to maintain rates at these levels, gold will remain under pressure. I even believe prices could fall to $1,750 if they break below $1,800. The renowned analyst Gerald Celente had initially foreseen gold prices reaching a bottom at $1,850 per ounce. Unexpectedly, they have since declined to $1,822, a level he did not foresee. Celente believes that lowering interest rates will lead to a weaker U.S. dollar, which could begin a decline in the dollar's global dominance. He anticipates as the dollar depreciates, gold prices will spike upward. The dollar fell on Wednesday, tracking the pullback in U.S. Treasury yields amid a mixed set of data suggesting that there are pockets of weakness in the world's largest economy, further diminishing the odds of another interest rate hike by the Federal Reserve before the end of the year. Additionally, Celente highlights the decline in global trade and negative manufacturing trends, particularly in Italy and Germany. Global trade flows have plummeted for a 4th consecutive month, beginning in July, due to rising prices and a series of rate hikes by central banks, significantly dampening demand for goods. According to the report, world trade in goods in July 2023 experienced a year-on-year decline of 0.6% compared to June. S&P Global's survey further underscores the economic challenges faced by individual nations. Italy's manufacturers endured a 6th consecutive monthly decline in activity, indicating a severe industrial recession. Meanwhile, Germany, Europe's largest economy, officially entered a recession with similarly bleak PMI numbers. We will now share clips from Gerald Celente. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for further updates. Thank you, and enjoy the video.
I had forecasted gold prices would bottom out at $18.50 an ounce. They're down to $18.22. I didn't think they would go this low. Did not think it was going to happen. But here's what's going to happen. When they lower interest rates, the dollar is going to go down. When the dollar goes down, it's going to be the beginning of the death of the dollar. If the plunge protection team doesn't stop this crash, gold prices are going to skyrocket. Trends on the global economic front, world trade falls to 3-year low. Oh, yeah, there's not going to be a recession. Oh, they just downgraded. Oh, the Purchasing Managers Index, the PMI in Italy, just came in at like 46 point something. 6 months in a row of decline. So again, when you go back to our forecast, what we said with the markets, we also said when you read the Trends Journal, and I was saying that during the summer, the markets are going up because it's summertime and the living is easy. People spend their money having a good time, trying to go on vacations. They're spending it in services, not in manufacturing. Again, Italy's manufacturing is down 6 months in a row in negative territory. Anything under 50 is negative. And then you go, and the last quarter, they're in recession. And they're the 3rd largest economy in Europe. And in Germany, the largest economy in Europe, the 4th largest in the world, is officially in recession. And their PMI numbers are in the toilet too. So Americans are going to spend more because they're going to be buying more cheap stuff from other countries because our dollar is strong. But all those other countries, particularly the emerging markets, are going to submerge because their debt is dollar-based. So you think you got a migrant crisis now? You haven't seen anything yet as these emerging markets submerge big time.
Gerald Celente observes that September has posed significant challenges, with a consistent decline in the Dow Jones Industrial Average throughout the year. He speculates that a potential market crash in October looms on the horizon. Nevertheless, given the prevailing uncertainty surrounding the Federal Reserve's actions, he underscores that efforts will likely be undertaken to avert such an outcome. Only 25% of market participants anticipate an interest rate increase at the Fed's upcoming final meeting in November. while 45% anticipate rate hikes in December. According to the CME FedWatch tool, interest rates are widely anticipated to remain stable during the September and December meetings. However, there is a notable exception with the Fed's November meeting, where the possibility of an interest rate increase is just under 40%. Celente's forecast suggests that, irrespective of these decisions, the Federal Reserve is likely to reduce interest rates in the 2024 presidential election in support of the ruling party, which he believes is influenced by the Federal Reserve. Let's get back to the interview.
It wasn't a happy September. Now, why does the Dow down, for the whole year now? And again, we had said that the S&P 500 would go up in last November, that it would go up this year by at least 16.3%. It went up almost 20%. And because it went up following the last 40 midterm elections in the United States. And then we said it would go into a decline, which it has. And now it's up only about 10-11%. So the worst is yet to come. Will the markets crash in October? They're going to do everything they can to keep that from happening. No question about it. So the guess on the street is that when the Feds meet, their final meeting in November 1st, it ends, that they're not going to raise interest rates. Only 25% of the street's betting that they're going to raise them. And 45% is betting that they're going to raise them in December. And we are forecasting that no matter what they do in November or December, we don't know what's going to happen. It's a guess. But they're going to lower them in the run-up to the presidential reality show in 2024 because they want to keep the party in power because the party in power is run by the Federal Reserve. And all you have to do is look at who our Treasury Secretary is, Miss Fatja Brut, Janet Yellen. That's right. A former job. Oh, the Fed head? That's right. Head of the Federal Reserve, now our Treasury Secretary. So they're going to do everything they can to keep the crime syndicate in place. And again, the only way I see it changing is with a new third party. And although the markets went down today, oil prices are still over $90 a barrel for Brent crude. So we have the economic update, the market overview. And again, when you're looking at the data, the investors believe that the Fed's going to stay in a tough stance. And why the market's going down. Again, this isn't rocket science. You're looking at the Treasury yields going way up. So why are you going to gamble in the markets when you can get 5% on money market funds and almost Treasury yields with very, very, very little risk? So the people are going to start putting more of their money into treasuries and money market funds and not gamble in the markets. And then you have to look at the PE ratio in the markets. They're like 25% almost. And that's like the high end. So you go back a year ago, it was only 17%, and the markets were down back then. So it's going to go much lower. But again, it's a gangster organization. They're going to do anything they can to keep propping it up. They got this fucking shit called a plunge protection team. What the fuck are you talking to, a plunge protection team? You're rigging the fucking markets. It's the New York Federal Reserve right in Wall Street, with pumping the markets up when they go down.
Looking ahead, the trajectory of gold prices appears poised for a shift. Influenced by a robust dollar and elevated bond yields, the recent decline may soon encounter a turning point. Gold's value could surge upward as the dollar's global dominance faces challenges and the economic landscape evolves. How will the dollar's global dominance impact gold prices in the coming months? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.